Good afternoon, my name's Shaun, I'm a tax manager here at Lewis Brownlee. As we'll shortly close out the 21-22 tax year, this video covers off a couple of points you should be thinking about before the end of the year, and then looking at some important changes coming in tax year 22-23 and tax year 23-24. So firstly, looking at national insurance. It has been widely published, but the government are looking to increase rates to fund the NHS by way of increasing national insurance by 1.25%. So as a sole trader or a member of a partnership, the way that will affect you is by an increase in class 4 national insurance. So presently you pay 9% on the profits up to circa 50,000 and then 2% thereafter. But come 6th of April, that will go up to 10.25% and 3.25% respectively. The increase doesn't affect Class 2 national insurance, so that will stay, as is presently the case, at a fixed amount calculated on a weekly basis. From tax year 23-24, those of pensionable wage will be required to pay the increase once it's rebranded as a health and social care levy, which may come as a shock because they don't presently have to pay national insurance. That is something to be mindful of. The other things to be thinking about are working from home. So as a sole trader, you would have heard that those who are employed were entitled to a cash-free payment from their employer of £312, or they were permitted to increase their tax code by an equivalent amount. So from working at home, do remember that you can claim a flat rate deduction of up to £312 a year if you have worked at home more than 101 hours per month. Not a lot, to be honest, so you may be better to claim based on the actual expenses incurred. So if you have installed something such as a phone line directly for business use, you are permitted to claim that in full, but also you can claim a proportion of your overall home expenses such as rent, council tax, water, and so long as that's done on a just and reasonable basis, that is permitted, so don't miss out on that. A big change that is coming in, and I can only go in brief here, is HMRC's intention to scrap basis periods. So I will say, if you're not familiar what a basis period is and how that interacts with your accounting period, Lewis Brownlee will be issuing some written guidance, although there is guidance already out there from a Google search. But that will set out the more detailed rules. The takeaway on this video, though, is that the scrapping of the basis periods will heavily impact some businesses. So, for example, if you presently have a 30th of April year end, you will be aware that your assessable profits for tax purposes are based on that year end date, and that doesn't always necessarily line up with the tax year. So using the tax year 21-22 as an example, the profits being reported were based on 30th of April 21, so right at the beginning of the year, and then looking back 12 months from there. But coming in tax year 23-24, the HMRC's intention is to ensure everybody is taxed based on the 6th of April to the following 5th of April. And that transitional year will create complications whereby you'll be assessed on profits up to the 30th of April 23, as has always been the case, but you will also be assessed on the further 11 months up to the 5th of April 24. So in one tax year, you are effectively assessed on nearly 2 years worth of profits. Now, not to be an alarmist, there will be relieving provisions whereby you can deduct overlap profits based on the opening years of the trade, and there's scope then to spread out those increased profits over the following 5 years to ensure that the assessment, or the tax assessment in 23-24, isn't extortionately high. But it will be key to ensure that you prepare for that change, to ensure it is done smoothly, and it's something you've prepared yourself for. Being mindful as well with the introduction of making tax digital and the phasing out of the traditional 12 monthly tax return, those with profits over 10,000 will be required to submit a return on a quarterly basis, and those submissions and the records backing them to be held electronically. Now, not all clients, but some clients will be used to paper and manual records, but with the introduction of making tax digital, that will no longer be permissible. So all I would say is, if you are a client, reach out with us in good time. We can help you through that transition, help you avoid any shocks. If you're not a client already, feel free to give us a call. We'll be more than willing to help you transition through that phase and enjoy a relationship on past that. So thank you for your time.